We're joined today by Todd Warren, Partner and Portfolio Manager at Tribecca Investment Partners. Todd, thanks for your time.
Thanks for having me.
Specialising in mining and energy, what are some of the trends you've seen over the last 3 to 4 years? There's been some big trends emerging.
Absolutely. I mean, the key trend that we've seen is obviously a shift towards the decarbonisation enabling commodities and the growing realisation that mining of those commodities is actually going to be a way of actually achieving some of our net zero ambitions. Alongside that, of course, is the challenge around the supply side. We're coming through the back of a 10-year underinvestment cycle, and there are going to be some pretty big consequences of that.
Has this caught people by surprise, do you think, how much underinvestment has occurred and what that now means to the supply side?
Yeah, I think the real issue here is people don't appreciate that underinvestment has big consequences, and you can't just snap your fingers and bring new supply on. I mean, there's the understanding about what decarbonisation means, and I think a growing realisation that we're going to need an awful lot more of these commodities, or at least consume a lot more of them. But the reality is, it's never been more difficult to permit a new mine. The timeframes around, exploring for finding new deposits and bringing that into production has never taken longer. The realistic scenario here is that it's going to take a lot longer to actually deliver those commodities.
And in turn, that will have an impact on commodity prices. What are the commodities you're looking at? What are the commodities you're telling clients to look at?
Yeah, we're heavily tilting our portfolio towards those enabling commodities of the net zero ambition. So it's copper, nickel, cobalt, rare earths, graphite. Lithium is the obvious one that gets a lot of the airtime. We actually see some larger opportunities amongst those other commodities I've just mentioned.
Jurisdictions? Are there any jurisdictions that stand out or ones to avoid?
Look, the obvious one here is that China remains a very big part of the puzzle, certainly from the downstream, the processing side. What we really like is actually that you're seeing some big moves by governments around the world to incentivise bringing some of that production onshore. So you've seen the US legislate the somewhat strangely named Inflation Reduction Act. The EU have drafted up their own version of, and you're going to see that around the world. And what that will mean is you see essentially a deglobalisation of commodity supply, and that of course means onshoring and inflation, as it's not so easy anymore to just outsource to China.
Government intervention, have you been surprised by how quickly that's happened and the impact it's then had on commodity prices?
Well, it'll be interesting to see how it does play out, to be honest. Governments are, I think, just starting to move with a bit more ambition now around investing real money into bringing supply on, and it's that idea of the criticality of the minerals and the realisation of governments that they need to be incentivising new supply, because the capital markets, debt and equity, are just not capable of supplying the relevant funding to build these assets. So it's going to need governments both with dollars and smoothing or at least easing the permitting flow to enable these mines to be developed.
An active fund manager, Tribecca, but also take a long-term view on a number of investments. Looking forward 5 years, what do you think the resources and the energy landscape will look like?
I think what you're starting to see right now is interest in the smaller end of the spectrum, but markets still remaining very focused on the larger end of the spectrum, because the generalist investor is still not sure how to get exposure, and so they're focusing on the big end of town where they can more easily get exposure or also change their mind. What we're excited about is that small end of town where we can get in earlier and use our specialist expertise to identify those opportunities, but also you're starting to see bigger companies with cash flows and existing balance sheets now starting to think about M&A. And that's what we really like the sound of, because it's cheaper to buy than build. And so you're seeing corporates coming in and buying up the smaller end of town where we have quite a significant exposure.
Exciting times ahead for the resources and energy sector. Tribecca clearly at the forefront of advice in that area. Todd, thanks for your time.
Thanks, David.